Holy smokers! This ain't no jokers, everybody. Dynamic Income Fund, PIMCO. We're going to look at how it's doing. So this last updated yesterday on April 20th of 2023. We are so close to being at NAV. I bought this thing at 1730. I did sell it, and then I did a buy order significantly lower for a 13% yield in my TFSA, and we hit it, baby. So at 1730, the NAV as of right now, or yesterday, was 1728. Daily year-to-date returns is 2.53%. Breaking it all down right above me, all the fun information. And we're going to just go over the fund. Now, because of HYLD's dividend cut, it's always good to go back and see, is anything changing the portfolio? Should I be concerned? Is there anything like that? So the daily NAV distribution rate is 15.31% compared to the market distribution rate, this is what we buy it for, of 15.24%. Now, obviously, this has changed. Actually, it has changed because it hasn't been updated yet. So, distributions based on their NAV still covers that. And we're going to go over the distribution and all that stuff, which is awesome. The now distribution rates as of March 31 of this year. Now distribution rate of 15.25% and then the market distribution rate of 14.68. Distributions. Last distribution breaks it down. Year to date, we're getting very close to being halfway. And special distribution, which was last year, it breaks it all down there. The ex-dividend date, all that fun stuff. Management fee, total expense ratio, including interest expensive. So this is the MER. The MER PDI is absolutely insane. It is 2.64%. And in my opinion, it has a good reason for that, but everyone is all different. Cumulative returns for the NAV. Year to date, 2.53, 6 months, 4.6, negative 0.7, and 1.11. Breaks us all down. If you guys really want to take a look, feel free to come to the website. The price of PDI, both the NAV and the stock price, have just collapsed as of late, starting in July of 2021. It's done nothing but go down. Now, the reason for this is its holdings. It holds Credit Suisse bonds and stocks, which are now, I believe both of them are worthless, and Silicon Valley Bank, which was the first U.S. bank to go bankrupt in years. They hold bonds from them too. Now, I do not know what the situation is with the bonds from Silicon Valley Bank, but the moment that came out, this thing dropped like a brick from $20 or like 20, whatever this was. I think it was like $18.30. It dropped like a brick. Highs and lows over the 1 year. The high, based on a 1 year range, is 22.25. The low is 17.20. That's the NAV. And then for price, high 23.20, low 17. This is incorrect. It should be like 17, I believe, like 20.20. Breaks down sector allocation here. You have government related, which is 4. We can literally just go to it. May include nominal and inflation protected treasuries, treasury futures and options, agencies, FDIC guaranteed and government guaranteed corporate securities, and interest rate swaps. So that's what we have right here, which is negative 2%. I don't know why it's negative. I have no idea. I'm not the smartest man in the world. Mortgages, 31.52. Non-agency mortgages is 30.7. Agency mortgage-backed security of 0.8. CMBS, 7.75. High yield credit, 22.54. Non-USD developed, 17. Emerging market, 6.42. And if we go to it, short duration instruments, including securities and other instrumental, economically tied to an emerging market country, by country of risk with a duration of less than 1 year and rated investment grade or higher if unrated. Breaks us all down. So, okay, investment grade credit, these are basically investment grade bonds, 2.91, municipal, 1.2, other 5.57, net short duration instruments 7.04. PDI has an effective maturity years of 7.19. You can break it all down here. Less than 1 year to expiration is 30% of their bonds and loans. 1 to 3 years is 11. 3 to 5 is 2. 5 to 10, 20. 10 to 20, 9. 20 plus is 3.85%. And your boy, the US, is their top country. So I just want to make sure I'm not blocking this. No, I'm not. Is the US, the United Kingdom, Spain, France, and South Africa. Duration in years. The total leverage adjusted affected duration is 3.9. Okay. So the UNII for PIMCO Dynamic Income Fund, as of right now, is 72%. So what is the UNNI? Basically, to break it down, this is your net investment income minus distributions. The UNII represents the life-to-date balance of the fund's net investment income minus distributions. UNII balance month to month. A rising UNII balance implies the fund is out-earning the distribution and increasing the fund's NAV. A declining UNII, that the fund is under-earning amount to pay for distributions and decreasing the NAV. And a sustainable one basically just means, hey, it's going to help to balance the earning and distribution. So 72%, not bad. Now, let's look at their holdings. So we have a breakdown, all this fun stuff. Now, here we go. Now, I'm going to explain to you guys how to read bonds, because your boy really does like bond funds, so I have a really good idea. Company name, and then this is the yield of the bond, which is 10.5%, and it is 4.07% of all of PIMCO is this guy right here. Intelsat Jackson Holdings Limited, 6.5. The ones that don't have one, honestly, I have no freaking idea. Whatever this is, 6.5. Voyager Aviation Holding, 8.5. NMG Parent LLC, do not sell. I do not know why that's there. Whatever this one is, holdings. The number of holdings is 1,780. Pretty damn good. So all of this makes up almost 25% of PIMCO. I'm going to hide myself here really quick so you guys can see it. Of the entire holdings, which is all this fun stuff right here. Now, the ones that don't have anything, I'm not really sure, because sometimes it's like to be determined, it's floating rate, so they can't put it, and all that fun stuff. So, overall, I'm extremely happy with about it. Today's performance was absolutely awesome after it was reamed very heavily and hit a brand new all-time low for the fund. And PIMCO's been severely underperforming the market for quite a while now. As you guys can see, sorry, I'm going to just move it off to the side there. As you guys can see, it's been underperforming quite heavily. It was at one point $30. I believe it was like 30, there you go, $33.50 at one point. It dropped, and it's just done nothing but declined since a high of May 2021. Straight down. You're down about $10. Why even buy it at this point? What is the point, and why do I want to own it, and why do I want to continue owning it? PIMCO, since inception, has never cut the distributions. They have always been able to sustain it, and they are continuing to sustain it. Breaking this down, here's the distribution based on Yahoo Finance, which we just keep going. Look, it's exactly the same. Look at that. Special distribution. Div hike in 2015. Keep that in mind. Look at that. A div hike in 2013. And also another special dividend, by the way. Okay, let's keep going. Maybe, oh no, it didn't load it. There's basically one more hike way down here that isn't getting shown right now. But the distribution has been consistent. It has been growing for years. The fund has done very well. And while the special distribution has become very sporadic, no guaranteed. Like, you've had it quite a few years in a row, and then 2020 hit. Nothing. 2021, nothing. 2022, there's a special distribution. So, it's been very consistent, and it's been a very consistent, well-diversified, income-generating, close-end fund. However, the downsides of it, the stock price has gone horribly wrong, but the NAV has also dropped off a cliff, but because of Credit Suisse, Silicon Valley Bank, and just, interest rates going up. So that means if you buy a bond and interest rates go up, the value of that bond decreases. You are still going to make your return, you just can't sell it yet. And because they're not a bank, they don't have to. So I am more than happy to just wait and ride this thing out. I think 1730, if you want to buy this in TFSA, is the absolute best price. It has a 13% yield. Again, never cut it. I could always be wrong. I want to make that very clear. But PIMCO has been my pride and joy for a very long time. I was trading it up and down when it was going, these little bumps, all the way 18. No, this is the wrong one. 18, 20 sold it down here, went way up, and I had to wait a very long time. And I was like, it's never going to drop back down. Finally dropped back down. I bought a whole ton, and now I'm very happy. So it has been amazing to buy and just ride the wave. But I am expecting this fund to continue to drop. Because just look at the share price. It's kind of atrocious. Now, this share price, like the little ups and downs. Now, this one has a reason because, again, it's bonds. Bonds are all down because of interest rates. Its holdings have been obliterated, mainly the Credit Suisse ones. But it's still significantly better than looking at other funds that just nosedive since IPO. At least PDI has been able to hold its own till COVID, and it's just never really recovered. I mean, funds like HYLD, like, you're still down $4. I think you have a negative total return, where PDI has at least a positive one. So, full disclosure, I own 100 shares of it. 1730. As I mentioned, I was very happy because we're almost break even with the NAV of it. And I'm excited to see where this thing goes, but I'm also ready for this thing to drop pretty drastically. I don't believe they're going to cut the dividend. It has $4 billion of assets in it. I'd be very surprised if it was to cut the dividend. But that's it. HYLD cutting the dividend. I just wanted to go back. I wanted to double check how PIMCO's doing. I'm overall very happy with it. I had a quick glance at some of the holdings it owns in this, where is it? I believe it's a document one, or it's portfolio. No, it's documents. In documents, they have holdings right here, holding report, quarterly commentary, UNI, annual prospect, statement of additional information, etc., etc., etc. So, if you own PDI too, I recommend you go through these and you just dig around and see what you can find. But, I'm happy with it, and I'm going to keep holding it. And because of the price I got, I have no desire to sell this anymore to try to get a lower cost and a higher yield on cost. Gonna ride it out, and we'll see, maybe I'll look back in a year and I'll think, God, I should have sold it. It was a big mistake. But for right now, I am very excited with it, and I hope you guys follow me on this journey. Bye!